Hi, you're listening to the Stephan Livera podcast focused on Bitcoin and Austrian economics. Today, my guest is Gene Epstein. I've got a lot of listeners who are Bitcoiners who would like more exposure to Austrian economics, so this episode will be a real treat for you. But first, let me introduce the sponsors of the podcast. So firstly, Kraken, one of the world's leading Bitcoin exchanges. They have a really strong focus on security. They are one of the longest standing Bitcoin exchanges. They're consistently rated the best. They have a high quality platform. They offer some of the best liquidity available in the industry. They've got high trading volume and low fees with no minimum or hidden fees. Kraken have 24/7 support, and on the institutional and business solution side, they are providing best-in-class accounting, reconciliation, and reporting services for cryptocurrency hedge funds, asset managers, and fund administrators. Kraken have an OTC desk for large block trades. They offer 5 fiat currencies and also offer margin and futures trading. So go to kraken.com to sign up. There's a link in the show notes. Next, Unchained Capital. They're a Bitcoin financial services company offering a really cool 2 of 3 keys multi-signature vault product. You can use Trezor or Ledger. It's a web interface. It's really simple to use, and it allows you to distribute your keys. Unchained also offer Bitcoin collateralized loans, so you can get USD liquidity without selling your Bitcoins. So consider your scenario, but this might be more tax efficient for you, meaning you can keep hodling rather than selling your Bitcoins. While that loan's outstanding, it's stored under collaborative custody with Unchained. So if you want to learn more and sign up, go to unchained-capital.com. There's a link in the show notes. Gene Epstein is director of the Soho Forum, a really popular debate forum, and prior to this, he was economics and books editor at Barron's for 26 years, and he has got a lot of insight to share with us in terms of Austrian economics and how some of that applies to Bitcoin. Gene, welcome to the show.
It's a pleasure to finally meet you. Is it Stephan or Stephen?
Yes, Stephan.
Stephan. Well, Stephan. And here I am in New York City at 6 in the evening, and you're in Australia at 8 in the morning tomorrow. And that's pretty exciting in itself.
Yes, it is. Look, so Gene, I've listened to many of your appearances. I'm a big fan, obviously, of Tom Woods and Bob Murphy. So I've listened to your appearances there, and also I'm a fan of your work in moderating and being the director of the Soho Forum. And I know you've got a lot to share in terms of Austrian economics. And so, yeah, I'm looking forward to discussing with you. Maybe we could just start with a little bit of an intro on you, and what are you working on these days with Soho Forum?
Well, the Soho Forum, a week from, actually 6 days from today, New York City time, is going to have a debate on the war on drugs. And our debater, the debater for the affirmative, it's always a one-on-one debate. The debater for the affirmative, Jacob Salem, who's written a lot about the subject, in fact, also included a book, a very good book about the subject, is going to defend the very extreme version of the complete legalization of drugs. That while he's granting that you may want to have a law governing the sale of drugs to minors, you may want to have a law that governs the use of drugs by people driving automobiles, but beyond that, nothing, no laws against drugs at all, even including the sin taxes on drugs, which of course we do have for alcohol and regrettably for pot. So it's going to be a very extreme view that he's going to defend against former New York Times journalist Alex Berenson. And so I think it should be an exciting confrontation. I myself, on November 5th, that's the next debate we're going to have, will be debating once again socialism with perhaps the most eminent socialist in the country, Richard Wolff, who's written many books on the subject and numerous articles, perhaps the leading socialist in the country. This very possibly will be my last debate with a socialist, but I definitely wanted to do argumentative combat with Richard Wolff. That will be on November 5th, all of it in New York City.
That's fantastic. I really like watching some of the debates. Obviously, I'm in Sydney, so I have to watch the online version, but I really enjoy the debates. I think you get a lot of really high-quality people, and you really moderate them well. We know if those of Bitcoiners who have listened to some other debates know that there have definitely been some let's say poorly moderated debates, and they don't result in a nice conversation. And I think you need a little bit of that strong moderation to make sure that it is well organized and orchestrated.
Well, thank you. That's interesting. We're going to be discussing. I know you said you were interested in the two debates I had on Bitcoin, and one of the debates I had on fractional reserve banking. And so I gather we're going to get your thoughts on those, the substance of those confrontations, and I look forward to hearing what you have to say.
So, look, I think, yeah, you're right. And let's talk a little bit about, before we get into those, I think it might be nice to just discuss some of the fundamentals of Austrian economics and money from,
Yes.
the legends, Mises and Rothbard. Did you want to just give us an overview of your own thoughts on how they might apply, and potentially, are there any things that you believe Bitcoiners are missing or confused on?
Yes. Well, again, I'm going to assume that your readers, or your listeners rather, know very little or next to nothing about the subject, and really that's okay. It's almost preferable that you haven't been brainwashed by the mainstream. I myself, sleepwalked through high school and college, and I didn't study any economics in undergraduate school, almost luckily. But then I was interested in socialism, and I went to the New School, and I ended up teaching mainstream economics to undergraduates. And by pure happenstance, I picked up a copy of Murray Rothbard's Man, Economy, and State, and that was a game changer for me. It was kind of a funny way to get into libertarianism, free markets, through that text, that two-volume tome. But because I was teaching economics, and because I was interested in issues of socialism and capitalism, it was my way in. And in fact, I have an introduction that I was privileged to write for a collection of Murray Rothbard's essays. But backing up for a moment, why do we call that Austrian economics? Well, it came out of Austria, amazingly enough, and I can't even quite know why. What is it about the Austrians that made them so perceptive? It's associated with Austrian economists, Ludwig von Mises, as you mentioned, and then also Mises was a student, basically, of Karl Menger, another Austrian, and Baum-Bauer, Eugen Baum-Bauer, also an Austrian. Those are the three most prominent Austrian economists who were indeed from Austria. And we have Adolf Hitler to thank, ironically, for the fact that Ludwig von Mises, who was a Jew, fled Vienna and for Switzerland, and then fled Switzerland for New York City, fled Hitler. And Ludwig von Mises set up shop at NYU, couldn't get a normal academic appointment, but he had a subsidy to do a seminar, and that seminar gradually attracted a lot of Americans. One of them was Murray Rothbard, who, of course, went on to call himself an Austrian, even though, of course, he's just a Brooklyn Jew. I'm a Bronx Jew. He's a Brooklyn Jew, and Rothbard became, in a way, Plato to Mises' Socrates. Amazingly, Mises, at the age of 58, after having published many books in German, began to write in English. Amazingly, because he wrote so well in English for somebody who had been used to writing in German. And I highly recommend his book, Human Action, written in English, plus other books. And in a way, I think the best name for Austrian economics is indeed Human Action. And if one were to ask, what is it that distinguishes Austrian economics from mainstream economics? Well, the first thing I would say is, in a way, Austrian economics is a redundancy. What do I mean by redundancy? Whenever we naturally think about economics without being prompted, and here I'm addressing people who have no background in economics, we use the method of methodological individualism. We work from the individual and the individual's motivations, and we see the market as a process of trial and error. We read about Jeff Bezos of Amazon, who decided that the market was deeply mistaken to be channeling so many goods through the bricks and mortar outlet of retail bricks and mortar. He foresaw that we could buy so many goods through the internet through the mails. And so that's how he became the richest man in the world. And Bezos is now continuing to tell us that the market is still deeply in error because, as he has said, I can't be the merchant to the world unless I also get into food and clothing. So he said as well that all these purchases we're making of food and clothing through bricks and mortar stores are simply inappropriate. He's going to correct that market error. And so the market is never in equilibrium, which is the focus of the mainstream. The market is always in error, and there are always people coordinating, competing in a rivalrous fashion to readjust the market to correct that error. So that, by the way, so that it better serves consumers and better serves those of us who work in the market. Because as Rothbard also said, there is no consumer sovereignty, there is only individual sovereignty. We individually have sovereignty over ourselves, just as you, Stephan, have decided that you're going to pursue a certain career. And nobody told you the consumer is not your boss. You've said, well, this is what I want to sell to the consumer. This is the way I want to make my livelihood. And so you're exercising individual sovereignty, which is fundamental to Austrian economics. But now let's hone in on how the Austrian economics applies to Bitcoin. I think it's interesting as a footnote that based upon what I read about Satoshi Nakamoto, who was, of course, the ghost-like originator of Bitcoin, he had some familiarity with Mises and some familiarity with Austrian economics. Well, this is in a narrow fashion, and this is ironic. If you study the mainstream, then mainstream economics tells you that money has got to be managed by the government via a central bank. They've suddenly decided that money has got to be dominated by a government institution. And this is never questioned by the mainstream. They just begin from the point that money is outside the market. It has to be managed by government. This is an unexamined assumption. And of course, what's distinguished Ludwig von Mises especially is that in 1913, he wrote a book called The Theory of Money and Credit, and in which he basically understood that the origins of money precedes government, and that he invented something called the regression theorem, which I think is a lovely theorem because it's an inference about history that we use money, we value money because of what we know it can buy. But how do we know it can buy anything? Well, we know because it could buy things yesterday. And then how did we know yesterday that it could buy things? Because we knew that it could buy things the day before. And then so that regresses further and further back. And then Mises asks, well, what happened at day zero? How did anybody know that money could buy things? And that's because, as Mises said, because all money originates in a commodity, as in the case of gold. It originates in gold. And there are many who have a hang up about Bitcoin because people think that Bitcoin did not originate as a commodity, but Bitcoin was tied to the dollar. And there was a certain insight, a certain knowledge about what money could buy that made Bitcoin money. And then, of course, famously, those pizza pies were bought by Bitcoin, and then Bitcoin became a medium of exchange. But there are now key insights that we know from the Austrians that I think are eternal and that I wish at times the Bitcoin enthusiasts who know often far more about the technicalities of Bitcoin than I know, I wish they would take them for granted. One of those things is that money is a network commodity. It's the network commodity. And what does that mean? It means that there is a natural tendency for money to be that thing that people most want. In the case of gold, it was the thing that people most want. Gold was at that point the most suitable medium of exchange. And then once that happens, once that begins to catch on, then in terms of human action, people then want to hold the money that most other people want to hold. And then the others want to hold the money that most others want to hold. And so very quickly, we realize that because we want to hold the money that will buy the most things, very rapidly, one money arises. Mises, by the way, allowed for the possibility that there might have been two monies. He actually pointed out we never really quite got the historical experiment. Maybe money could have been gold and silver. Maybe there could have been two monies. The more valuable money gold, the less valuable money silver. But the idea that there could even be more than two or more than one, that's almost questionable. So when we know that money is a network commodity, then we begin to understand that the balkanization of money is a nation state phenomenon. The reason why we have the euro, the dollar, the Canadian dollar, the British pound, the yen, the Aussie dollar, is because we have nation states, and those nation states often want to have control of their own money. That's why we have exchange rates, one money exchanging for another. But interestingly, 90% of the transactions internationally are made in the dollar because there's a natural tendency for the market to gravitate toward one money. And the dollar is the closest thing at hand. And so that is in a way testament to the Austrian insight that money is a network commodity. But the second most important insight, and just recently I heard a very knowledgeable person on your show, Stephan, seemingly imply ignorance about this other fact, which is why people hold money in the first place. Mises wrote that the idea that money can ever be a store of value is only true in a world in which you don't have stocks and bonds, in a world in which you don't have other ways of investing your money. That money is never a store of value because money is inert. It doesn't earn anything. And if money is going to become, let's say prices are falling, which indeed would happen under Bitcoin. If prices are falling, your money is going to become more valuable a year from now, but better to invest it in stocks and bonds where it can earn dividends or capital gains or interest over and above that. And so Mises pointed out that we store value, those of us who aren't eccentric or nuts, we in an advanced industrial economy, we use instruments like stocks and bonds to store value, or of course, we speculate in commodities, we speculate in real estate. All of those are ways of storing our value. We do not use money to store value. Again, that's for the eccentrics, the Silas Marners of the world who want to store gold in their basement, because that's obviously not the most remunerative way to store value. So money is not a store of value. And I think it's very unfortunate that this term has been used. Why do we hold money? This is the final insight. We hold money precisely because we live in a world of uncertainty, because we never know when we're going to need a bit of money to buy something with. So we need some liquidity. But if we're rational, we keep our liquidity to a minimum. We try to store our money in short-term assets to convert it quickly into money. It's the medium of exchange. And in an electronic marketplace, this money can be used very efficiently. As Rothbard in particular pointed out, if there were no uncertainty, if we knew exactly what we're going to buy every hour of the day and every day of the week, we would store all our money in short-term instruments, and it would immediately mature. And then in that instant, we'd use it to buy something with. And then we'd have a very weird world indeed. But because we live in a world of uncertainty, we do need to hold some money balances. But that's the only reason why we hold money. And that would, now, of course, obviously, we are speculating in Bitcoin. We're speculating in Bitcoin because by and large, Bitcoin has not yet become money. But let me finish my final point in my little disquisition. I believe, and I've been persuaded by so many people I've read, you as well, some things I've listened to from you, books like the one by Saifedean Ammous, that Bitcoin, if I were to choose, if I were to vote, then if there is going to be a free market in money, and I'm going to get to in a moment why that's a possibility, then Bitcoin is probably the best candidate. It's probably the best candidate because while gold was good, gold had advantages, Bitcoin is a little better. And then maybe I could leave it to you to elaborate on why it's a bit better. And it's a bit better by a noticeable margin. And I think that the fiscal crisis of the state, which we could get into, which I believe is likely to happen 15 years from now. It could happen sooner, but the fiscal crisis of the U.S. state, in particular, the dominant state, because the U.S. state is accumulating so much debt, because 10 years from now, the mere servicing of the debt could cost $1 trillion a year. I think there will be a fiscal crisis. There will be an unleashing of the printing presses. There will be the potential for massive inflation, not necessarily a year from now or 2 years from now, but 10 to 15 years from now, because it's a gradual process with a very powerful U.S. And once that happens, then I believe Bitcoin, the value of Bitcoin could take off, transactions in Bitcoin could take off. And for that reason, I think that my son Jim is right to say that it's judicious for the conservative person to do what he does. He buys $200 worth of Bitcoin every month, and he buys it at whatever price the Bitcoin is available at. It's a kind of a conservative, income averaging, price averaging. Just whatever the Bitcoin is worth, buy $200 worth of it, so that you develop a base, an ownership of Bitcoin at a decent price. He does it through Coinbase. I pretty much exhausted my disquisition on Austrianism and Bitcoin, but so let's hear from you for a moment.
I think there's a lot of really great insights in there for my listeners on that. You touched on the regression theorem. You touched on the network economics aspect of it, and what we can think more like network effects rather. And I think that to me brought to my mind this fantastic essay by Hans-Hermann Hoppe, and it's called "How is Fiat Money Possible?" And in that, he's talking about how there are different, if you will, trading zones around the world. But wouldn't it make more sense if there was one global trading zone, as opposed to, each individual currency in each individual trading zone? And I think in that essay, Hans-Hermann Hoppe also refers back to a quote from Mises in Theory of Money and Credit. And I think there's a specific paragraph, but it's something like, one by one, commodities will be one by one rejected until we're sort of left with the most saleable one. And I think that really is in my view, that's the key sort of quintessential insight. And that really, for me, one of my favorite essays on this is Carl Menger's On the Origins of Money. And in that essay, Carl Menger is explaining how there are things that cause differences in the salableness of different goods. And then those differences sort of self-reinforce to the point that then there are some that are now more suitable to become a money, compared to other goods that are not so suitable to become a money.
Yes, and indeed, you just quoted. I had mentioned Menger, and certainly Hans-Hermann Hoppe, who is a contemporary of mine, is certainly a very worthy heir. One of Rothbard's proteges, and his writings command attention. He's clearly writes in that great tradition and deepens our insight about these facts. Indeed, as Hoppe said, we've, in a way, with all these currencies afloat, we've returned to a quasi barter situation. Although again, the market, I wonder if even Hans points out that actually the market deals with that because most things are priced in dollars. It's the most convenient currency available. But indeed, we have a lot of balkanization, barter, and almost a return to barter, as Hans-Hermann Hoppe has pointed out. I just want to say negatively that what you've just said means that if you ever have a guest on, and I think you might occasionally have one on, who's informed about the technicalities of Bitcoin, but who's going to say, well, isn't it just wonderful we have so many competing cryptocurrencies, or I'll quote another, we're finding out what money is all about, all this stuff. And again, you wish they'd read some of the people you just mentioned. We're not saying these people wrote the Talmud, they're not, this is not chiseled in stone. However, I will say that these insights are just almost self-evident that money is a network commodity. There will indeed be, if let's say tomorrow all the nation states of the world were to just shut down their money operations, then there would indeed be competition out there. Gold might compete with Bitcoin, maybe other cryptocurrencies will compete, but they will soon enough become one dominant money, because that's the way people deal with the world. We have short pencils. We just want one money with which to deal, maybe two monies, but no more than two, probably one. And I wish some of the crypto enthusiasts could recognize that.
Absolutely. I think that's a point I've definitely myself and some other, Bitcoin advocates are very much against some of the altcoin gambling that goes on. And I think there's a lot of people who sort of sell these false promises about altcoins
Yeah.
as though, that they're
Well,
gonna, that there's gonna be this kind of, as though there's gonna be all these different monies. But
yes.
I think to some extent
Yeah.
people are learning. So,
No, 90, yeah,
um,
90
yeah.
minutes to choose from. Right. Anyway.
So, look, I think it might be also really interesting to discuss some of the debates that
Yeah.
you have moderated. So,
Yeah.
uh, actually, I think the listeners might really enjoy discussing about the debate. Now, this is I think this is 1 or 2 years ago. It's the debate with Erik Voorhees and Peter Schiff. Right? And so it was sort of like a Bitcoin and gold debate. And one of the interesting points that seem to kind of go constantly back and forward, and I guess for many Bitcoiners would be sort of skeptical of Peter Schiff's seeming inability to understand the point about there being no such thing as intrinsic value, right? He seems to constantly kind of refer back to this need that, oh, look, gold, you can make jewelry out of it, or you can do
Yes. Right.
space applications and so on. And so his argument in that debate seemed to be that Bitcoin, you
Yeah.
can't do anything like that. And so therefore, it's all just going to go back to zero someday.
Yeah.
But what's your view there?
Well, yeah, it's good sequentially. You began with the first Bitcoin debate we had. And by the way, in that case, last I checked, it's probably climbed since then. That debate has had more than 500,000 views on YouTube. And so perhaps a lot of people listening to this discussion between you and me are already familiar with that debate. And that just dwarfs everything else we've done. The recent Bitcoin debate we've had has been very popular as well. Maybe it'll get up to 500,000 views, but that's off the charts for us. And in that case, as you said, it was an interesting clash between somebody like Peter, who's loyal to gold, and actually a very smart guy who funds the Soho Forum, Don Smith. Spoke as well that evening. He's a Bitcoin bear, and they can't get past the idea that Bitcoin might not have had independent uses as a commodity, and for that reason, because it's not had independent uses as a commodity in the way that gold had. Then for that reason, it can't ever become money, and that I struggle with that a little bit. And I don't think I perhaps it helped for me to read about Satoshi and recognize that he too understood that issue. And in particular, of course, we want to add that Satoshi solved the problem that Friedrich Hayek had unwittingly raised. Hayek wrote a book that the Austrians said was an embarrassment, the privatization of money. That wasn't quite the title, but that was the thought. That
The denationalization of money, right?
Denationalization of money. Yeah, thank you. That it would have that we could have private organizations bringing out money. Rothbard, who was quite a joker, a Jewish guy from Brooklyn who liked to joke, said, "Yeah, I'm going to bring out Rothbards, and everybody's going to use them. I'm going to call them Rothbard's money, and they're going to catch on. But who's going to trust me not to inflate the currency because I could become fabulously rich if I just inflated all the Rothbards out there?" And of course, Murray Rothbard had a point. And prior to Satoshi's coming on the scene, I gather they did indeed bring out cryptocurrencies, which did not have the constraint that Satoshi imposed on it. And of course, as your listeners know, there will never be more than 21 million units of cryptocurrency, of Bitcoin out there. And so he solved that problem that, well, you don't have to trust me and you don't have to trust others. You can trust this absolute lock I've placed on the availability of Bitcoin, never more than 21 million units. And then I know that Bob Murphy, who's an esteemed colleague of mine, maybe he's been on your show. He's of course a very eminent Austrian economist. He said that, well, Bitcoin just came from the dollar, just like other currencies do. So it's now built on the dollar, and now it has all the advantages of being free market and money. That's probably a good argument. The other just part of it is that there was at least sufficient knowledge that this could be money. We're at an advanced stage in sort of human culture and civilization. And once Bitcoin was used to buy those pizza pies, then it became money. So it wasn't, I think, too difficult to cross that divide. And Peter, who has a lot of virtues, but I wish I wish he would read a little bit more of the Austrians. I wish he would inform himself a little bit better. He certainly embarrassed himself in front of Erik Voorhees, who was extremely gracious and extremely polite, who said, I've learned a lot from you, Peter, but Peter, nothing has intrinsic value. And so for you to say gold is advantageous because it has intrinsic value, that's ridiculous. Nothing has intrinsic value. I would put it myself to say that you might think that food and water has intrinsic value. Certainly gold doesn't really, if gold is just going to be used as jewelry, but how about food and water? Well, food and water do not have intrinsic value until you've decided that your life has intrinsic value, that getting nourished has intrinsic value. If you want to starve, if you want to hunger strike, then they have no intrinsic value. If you want to die, they have no intrinsic value. So we have to make an earlier decision before those things have any value at all to us. And so, again, nothing has intrinsic value. And Peter trotted out this naive statement, used this term that's offensive to Austrians because what we left out of our little disquisition on the Austrian economics is that it recognizes the inherent subjectivity of all value. Nothing has value other than the subjective value we place on those things. So therefore, the only thing that they're hung up on is what I just mentioned, which is that gold is tangible. But gold has so many disadvantages, so much easier for the government to seize gold. It's a physical commodity to grab it from people. Bitcoin has its problems as well, but by and large, it has advantages over gold. And I think that justifiably then, Erik Voorhees won that debate according to Oxford-style voting, as perhaps those who aren't familiar with our debates don't know. I use the classic Oxford-style voting where through an electronic app, people can vote yes, no, or undecided on the resolution before the debate begins. And then the vote, of course, that you get in your favor counts against you, because the only way to win the debate is to score better after the debate is over. We have a second vote, and then you win the Tootsie Roll if the vote moves in your favor more than it does in relation to your predecessor. As I recall, I didn't look it up before I started to talk to you. I think Peter lost a few votes and Erik gained, so that vote went to Peter. But do you have any special thoughts on that exchange and on that debate?
Yeah, so I think I like the way you summarized that. I think essentially amongst the Bitcoiners, some of the work was written to sort of show that Mises was almost showing his work in some sense. So like it's saying that once money has already kind of become, once people have already started using it for exchange, it doesn't now have to keep having that, if you will, industrial use as gold has or whatever. Oh, yes. I think that's kind of the way to think of it.
Oh, yeah. Yeah. And by the way, I will say something, tell a little bit of a tale out of school. When I gave Peter a hard time, he seems to have forgiven me for it, but I try very hard to be neutral as a moderator. And indeed, I guess a professional secret is that if I walk into a debate where I'm sort of rooting for one side, more agree with one side than the other, as not infrequently happens, then I make a point of, wherever I'm aware, giving a harder time to the side I'm rooting for. If I'm going to ask a challenging question, I always ask one of the other side. I try to lean a little harder on the side I'm rooting for, just to make sure that I don't betray any bias. I made a bit of an exception that evening when I asked Peter this question, picking up on what you just said. Is gold does indeed have industrial and ornamental uses, but anybody can tell you that the price at which it trades, even then it was down only at about $1,200 an ounce. The price at which it trades is way in excess of what it would be valued at purely for its ornamental and industrial uses. And I asked Peter, particular, don't you agree with that? Where would the price of gold be if it was not regarded as a monetary metal? And Peter said he didn't know. He didn't know. So I embarrassed him. I said, Peter Schiff has just told us he has no idea what the price of gold should be. And he's the guy who recommends gold? So the guy is a goddamn billionaire. And of course, we were talking about taxing, only pays a 4% tax living in Puerto Rico. So I guess he could afford a little grief. And he didn't complain afterwards that I gave him a much harder time than I gave Erik Voorhees.
Yeah. One other point I think might be interesting to discuss. Now, one point that Peter Schiff was making was this idea of, what about gold-backed cryptocurrency? Now, many Bitcoiners are very anti that idea because, and let me explain why I think most of us would say that's really missing the point, is that fundamentally sound money, part of that is about freedom from government interference. And Bitcoin is designed in such a way to resist that centralized control or getting co-opted. And I think as Bitcoiners, we would recognize that there were many attempts to create private money that either got shut down or got co-opted, right? So if we can look at PayPal, Liberty Reserve, eGold, etc. I mean, the list goes on. What's your view there around a theoretical gold-backed cryptocurrency and whether that doesn't make sense, and really about Bitcoin's government resistance, if you will?
Well, now you're really opening a big question. I'm probably going to duck some of that. What you just said shows that you're more informed than I about this idea of mating the two, of this hybrid gold-backed crypto. It sounds a little bit weird to me, but the point that you made sounds sensible to me, that it's not the best way to go. The only thing I would want to stress is why we want money to be divorced from government. I would prefer that government dominate the production of shoes than have anything to do with money. The shoes would pinch, but we could wear sandals. We'd even be willing to walk barefoot. The history of money and government is really that the kings wanted to fight their wars. They could tax the people to finance the wars. They could borrow from the people to finance the wars. But those were very awkward, difficult things to do. So it occurred to them to seize the people's money, seize the gold, control the gold, and debase the currency and print money. And so really money originated in the warfare state. I think Murray Rothbard was correct to say that we Austrians believe that it's no coincidence that the Federal Reserve was created in 1913 and the U.S. fought one of its first major wars, World War I, in 1917. The ability to print money underwrites major wars that underwrote World War II. Whatever you might think of the worthiness or lack of worthiness of World War II, it was indeed financed through the printing press. And now, most, of course, as the welfare warfare state has developed, then the ability to print money finances the welfare warfare state. And that's the reason why we believe that it's not just about money. It's not just about the aesthetic issue of not liking the government to be able to print money. We believe that it really has a lot to do with the abuse of government, and that we would even say to those people who are not even conversant in these issues, doesn't it bother you to think that the government is so unanswerable to the people that it doesn't really have to worry about taxing and borrowing to get money to finance its operations? It can simply print money. And so it doesn't, in that sense, it's insulated from the will of the people completely. I mean, that's, of course, if you're, a conventional Democrat, if you're conventional classical liberal, or even a modern day liberal, isn't that deeply disturbing? And so for that reason, just as you indicate, we want the money of the future to be workable, to be possible, of course, but we want it out of the hands of government. And of course, that creates a huge problem because fighting government's going to fight back. There will be pushback. And that gets into, of course, important issues about which I know something, but maybe not as much as you and not as much as others, about how I know that cryptocurrency, Bitcoin in particular, has a better chance of becoming a free market in money, better chance of staying out of the hands of government than gold does. But I'm not sure of all of the ins and outs of that question.
Yeah, totally fair enough. One other point that I think you might be able to you were touching on almost earlier with the network effects point is that at one point in that debate, Peter Schiff was trying to say Bitcoin isn't really scarce because there's all these other cryptocurrencies.
Oh yeah.
But at the same time, would we not expect, in the same way that there are differences causing, varying degrees of salableness in normal goods, we would see that amongst cryptocurrencies as well. And in our view, we would see it like Bitcoin is the most liquid one and the most decentralized one and has the most, best technology. But would you say that's like a reasonable application of that idea that even amongst the cryptocurrencies, as so to speak, there are differences amongst them, and in that sense, they are not the same?
Yes. Sure, and I actually believe that in that case in particular, Erik Voorhees, I think, dealt pretty well in parrying what Peter said. Certainly, perhaps Erik even said that you could just as well say that gold isn't really scarce because there's also silver, and indeed copper has been used as money. You could say anything's not scarce because then you could just decide that those things that are similar to it but not the same are that it's all the same. But in terms of subjective votes and subjective understanding, and it all gets back to human subjectivity. The fact that Bitcoin is in a class by itself, I think, is obvious enough.
Excellent. I would love to talk a little bit about another debate now. A more recent one is the George Selgin versus Saifedean Ammous debate. Now, the Selgin, sorry. And so the resolution was Bitcoin is poorly suited to the purpose of becoming any nation's main medium of exchange. And I guess one point that I saw Dr. Selgin make was around basically the transaction cost and the amount of time that it would take for settlement of Bitcoin, and he was trying to say, well, look, they could turn to other alternative currencies before going to Bitcoin. And then I guess if I were to just represent Saifedean's view a little bit here, his view is more like, well, there could be many different central banks, if you will, or Bitcoin banks, and people may transact on layers above that, and they're not necessarily transacting directly on the Bitcoin blockchain. Did you have any views around that or anything to share?
Yes, I want to address that, but just as a prelude, I want to say one interesting thing that I actually, George Selgin, as a matter of fact, has done 3 debates at the Soho Forum. I've done 4, but I've got a monopoly lock on it. But George has done 3, and he's very smart. I've learned a lot from him. But with that said, I was surprised by one thing. I've known him over the years. He's done book reviews for me when I was at Barron's, and he had told me most recently, more than once, that his problem with Bitcoin was in fact that there would be no more than 21 million units of Bitcoin. And he told me he was convinced that what this meant, as indeed it does mean, that not only will prices of consumer goods and capital goods decline over time, because if we get to over 21 million units, but if we double and triple the amount of capital goods and the amount of consumer goods and services out there, then clearly, as a matter of simple monetary math, those prices have got to come down over time, and that's already a problem, by the way, even for quasi free market people like the Chicago School. Just the very fact that prices will decline, but not so much of a problem for Austrians that prices of goods and services of capital goods will decline. We are able to explain to people. People will even ask us, well, if prices are going to decline over time, why would any capitalist want to invest in anything? Then because he's going to have to sell it for less in a year or two. Well, obviously the answer to that is that the capitalists work with the spreads. They'll pay for factors of production at a lower price, factoring in their expectation of profits. They're not stupid. But so therefore we have to get past that hang-up, which is not George's hang-up. George's hang-up was that labor expands over time. We have twice as many people working now as we had in 1969, where we will most likely have an expanding labor supply. So if in 30, 40 years, let's say Bitcoin becomes money now, and then 30, 40 years, twice as many people are working, that means labor compensation has got to be cut in half. And that's almost unprecedented. It's almost never happened on a sustainable basis. During the late 1800s, what happened was that prices came down, but wages more or less were flat. That's how people got richer. So, but we didn't have a cut in wages, in nominal wages. Now, that was George's hang-up, and I spoke to his colleague, Larry White. His colleague, because Larry White and George are you often linked, very thoughtful people with different views about fractional reserve banking, but they bring a lot of interesting insights to the subject. And Larry agreed with me that George was getting a little bit too hung up, and that the idea that people are going to rebel against a cut in their wages, rebel against a situation in terms of simple math. Well, yeah, you're earning half as much as you did, a number of years ago, but prices are now 90% lower of what you want to buy, so you're 5 times richer. Are people that stupid? Are we going to have labor union strikes? Well, not in a free market. So again, that I thought George was a little bit daft on that subject, but he was hung up on it. To my astonishment, so now I get to the denouement of this long disquisition on George's daftness. To my astonishment, when he got up there to debate Saifedean, he is going over the pluses and minuses of Bitcoin. And to my astonishment, almost the first thing he says is the fact that Bitcoin has a fixed supply of 21 million units. For that, it gets an A. For that, it's a plus. I said, "What, George? What were you saying for months on end to me about this?" I had actually told Saifedean in advance, "Be prepared for that. He's going to say that it's unsustainable because it's got a fixed supply and because labor compensation has come down." He didn't say that at all. And then I began to realize George Selgin, as brilliant an economist as he is obviously a little bit buffeted by this subject of Bitcoin. I don't know if he can really quite make up his mind or quite put his mind around it. Now I'm going to try to answer your question, but this is in part something I learned from my son, Jim Epstein, who I mentioned to you, who knows a lot more about Bitcoin than I. My son, Jim Epstein, who is a producer at Reason TV and a scholar for Reason Magazine, Reason Foundation. This is the thing. Just as you said, when George said that the transaction costs of turning Bitcoin over are too great, Saifedean did indeed fairly respond that George was making another naive error. He didn't recognize that consumer transactions, that most transactions that take place can be simply accumulated in over time, and that the real settlement of Bitcoin can take place in very large blocks. And that therefore this idea of George's that you're going to buy $100 worth of stuff when you go to the supermarket, and that it's got to actually be cleared, the $100 worth of stuff in terms of Bitcoin when you go to the supermarket, and that Bitcoin has got to be cleared, that $100 equivalent transaction, or that 2 Bitcoin equivalent, or 1 Bitcoin or half a billion equivalent Bitcoin transaction has got to be cleared in the classic sense, is naive. What will happen is that financial institutions will accumulate those transactions, and then there will be clearance and settlement at a much deeper level, in terms of billions of Bitcoins. I shouldn't have said billions, thousands of Bitcoins or hundreds of Bitcoins in much larger blocks, so that there will be no problem with respect to settlement in Bitcoin. So I think that, and Saifedean did indeed, I think, pretty clearly parry George's point by responding in that way. But now there is another problem, and here I'm going to quote Jim Epstein. Maybe you want to have him on to explain it. I've asked Saifedean about it. I think he's a little bit tone deaf about it. Saifedean then talked about, but there could be credit cards. There could be, and he was right to some degree, there could be credit cards. He said, look, if you want to give your grandmother, if some people want to hold Bitcoin cash, if some people are old-fashioned, they need to hold, Bitcoin cash or Bitcoin coins, there would be a market for that. If there's a market for that, if they want it, then that could be dealt with as well. There'd be an entrepreneurial incentive to provide that. But Jim Epstein was making a distinction in terms of the threat of government. And that gets back to what we were talking about earlier. Jim's argument is that the Lightning Network has hopes of developing a transaction mechanism for consumers for small transactions that could stay out of the reach of government, but that PayPal and the more conventional credit card companies are much more exposed. And maybe you could speak to that issue. So Jim Epstein has hopes that because he thinks that the Lightning Network has made advances and could establish a mechanism whereby we can transact in Bitcoin outside the reach of government, but that Saifedean was lumping the one with the other and not being sufficiently cognizant of the dangers of government interference. So that's the best answer I could give. I'm curious about your thoughts.
Sure. So I'm happy to, I can just give a very quick overview there. So the Lightning Network, we can think of that like a way to think of it like I'm opening a tab with you and I'm settling only the final transaction. Now we can get into the technical parts, all right? So there's a funding transaction, there's a commitment transaction, etc. But we don't need to go into that level of detail. But I think the key point to understand is that the Lightning Network is just as what we call trust minimized as Bitcoin, it providing some of the you're able to get that transaction into the blockchain to settle out your closing the tab, if you will. And so the cool thing with that is it can dramatically scale Bitcoin while still keeping many of the same, if you will, trust assumptions about Bitcoin. And so what it could theoretically do is imagine a world where we had no Lightning Network and we might need to be reliant on there being, as Saifedean says, I think maybe 10,000 Bitcoin banks, right? Maybe Lightning Network helps enable there to be even more Bitcoin banks. And then there are other technologies that are coming that will allow people to have different levels of, let's call it trust or security. And by delegating certain components of that, for example, to a side chain such as Liquid. But again, I don't want to get too much into the technical components of it. But I think at a high level, the way we would think of that and explain that is that some of these technologies enable us to still transact denominated in Bitcoin. And, it's not like fractional reserve, like Lightning is fully reserved. And in doing so, but still dramatically lower the cost of doing these transactions. Now, that said, there's still work to be done on these things. But most of us, like I'm bullish on Lightning, in case it's not clear. So I think these things can be solved with additional work.
And it'd be fascinating to hear you exchange your bullishness on Lightning, just as my son Jim Epstein is bullish on it as well. In this sense, that his argument is that the Lightning Network has the best potential to be outside the reach of government, to subvert government's power to interfere, and you feel that as well?
Yes, because I think fundamentally one of the, if you will, things about trying to scale Bitcoin is that every full node must maintain a record of every transaction ever in Bitcoin. And the fundamental reality is that it's not possible to, in some sense, make to scale that to every person's transactions directly on Bitcoin. But what we can think of it like is Lightning is taking some of those transactions off of Bitcoin's blockchain by, as we mentioned, sort of doing like a settlement at the end. And what it's also doing is there's another more complicated part, which is it's not just I could open a channel with you. It's I can pay somebody, like you might have a channel open to somebody else. Let's say you had a channel open with Saifedean and I don't have a direct channel with Saifedean. I can pay through my channel with you to the channel with Saifedean. And so that's called multi-hop, right? So again, I'm getting a little bit more into the technical components of it, but I think if I were to just summarize the key point here for you, it would just be that we are able to dramatically keep Bitcoin more decentralized. And in doing so, it remains more government resistant. But I'm also interested to discuss, I think, because you made a lot of really great comments before, and I was interested to sort of dive a little deeper into one of them, is this question of the fixed money supply of Bitcoin, because it sounds like so obviously there are inflationists out there, right? Like the Keynesians, and they will make this sticky wages argument. And and I remember listening to a talk by Dr. Guido Hulsmann, and he was explaining how there is a certain wing, I think the Weiserian wing, who might sort of believe in a need for inflation as well, whereas I think most of us would believe there's no need for inflation. But I'm curious, Do you see any similarities there between the view of Dr. Selgin around the fixed supply and the Keynesian sticky wages argument? Are they different? Are they similar?
Well, that's a good question. And as I said, there seem to be two Dr. Selgins. That's the problem, right? I mean, he astonished me by completely dropping the argument, actually saying that the fixed supply is an advantage. And so I don't know what to think. And as I mentioned to you, Larry White, who's very much in tune with George a lot. I mean, their work is similar. They're both interesting guys. They're free market oriented. They both want the Federal Reserve to be abolished. They have mixed feelings about Bitcoin. Larry agreed with me that there's so many. We now just have to think in terms of human action, of how people will respond. What kind of do we think that people that laborers are going to go on strike or quit an interesting job because the company says that our prices and our revenue situation is such that we're going to have to cut your nominal wage by 4% next year? But then we point out to you, however, that prices of most of what our employees are buying are down by 30%, and that therefore you're better off, but we're not going to be able to employ you or stay in business if everybody objects to the 4% cut. I mean, it's difficult to imagine what these people conjure up. What exactly is going to happen? Is everybody going to quit? Is there going to be a universal strike? What I mean, do we? I mean, are we going to say that if labor unions dominate the economy? I will grant this. If labor unions dominate the economy and they declare a universal strike because we can't cut wages, then I guess there will be then the economy will come to a standstill. But we who point out that laborers actually do have a lot of power, that wages do rise, and real wages, that is, rise. Because laborers do have bargaining power. If you don't get offered enough by company A, you've got company B, C, D, and E to go to. Then we point that out. But on the other side of it, in this case, we should point out that labor won't have the power to object, especially if we want to imagine this learning period where people have got to get used to a situation in which nominal wages will decline. There would be massive attempts and massive interest on the part of employers to start education, to post things on the internet, to train people in the situation, to make the point that with only 21 million units of money out there, revenues are necessarily going to decline, but you're going to get richer in the process. So difficult to imagine that people are that stupid or that the transition cannot be made. But then if you then want to talk about the virtues of that, I think that Bob Murphy, again, the guy I just mentioned, I'm sure you're familiar with, who writes a lot in the Austrian tradition, he's pointed out that in a way there's an advantage to the 21 million units because it means that for long-term planning, for annuities, for the purchase of bonds, for figuring out where prices are going to be, that's one element of stability in the marketplace that people can depend on. And it will probably mean then that in the long run, it will be easier to make long-term calculations about where the economy is going. So difficult for me to believe that that's a problem. And although I don't know. I mean, you tell me, maybe Satoshi could have set it up so that there could be some gradual expansion of the money supply. But I do think that the dramatic declaration that nobody can debase the currency because there will never more than 21 million units is an extremely valuable thing to have said. And at the end of the day, difficult to imagine why anybody should have a problem with it. Clearly, the Keynesians have a problem with it because the Keynesians work for government. Their whole livelihood is based on government. That's why I said earlier, at the beginning of this discussion, why they can only conceive of a world in which government dominates the money supply because that's where their personal interests lie. And I think that's another key aspect of mainstream economics. Why don't I digress and point out that mainstream economics is marred by two things: the desire to sit at the tables of power, as manifested by John Maynard Keynes, who clearly was a power-hungry person who was infatuated with Nazi Germany and with the Soviet Union. He revealed this quite openly in his talks. And the second problem with mainstream economics is that it wants to imitate physics. It wants to be esoteric. It wants to be mathematical. That's why they focus on equilibrium states so they can mathematize the economy. With that said, amazingly enough, with those two handicaps, the handicap, of course, of wanting to sit at the tables of power is indeed that you become an inflationist, because inflationism is good for the powerful. You see everything from a top-down perspective. You think you can manipulate the economy because that is where you have the possibility of becoming chairman of the Federal Reserve or advisor to presidents. So that warps their viewpoint. And then on top of that, the viewpoint is warped by their mathematization. I digressed because you were initially asking me about their hang-up with inflation, and I believe it comes from that sort of intellectual disease, their desire to sit at the tables of power. That's why Keynes called gold the barbarous relic, because indeed it was barbarous to somebody like him. It got in his way.
One point you were making there was also about entrepreneurs adjusting to the price level as it rises or falls, right? And so traditionally, I mean, in the world today, entrepreneurs who are doing long-term contracts, they may build in some kind of CPI term or some kind of inflation term. Now, if we were to live in a growth deflation world, like let's say we lived on a gold standard or a Bitcoin standard, then entrepreneurs could simply price in the other way around. Yeah. They could build in some kind of decrease in the prices. Right. But I suppose the point that, if I were to steelman this point against that, somebody might say, well, hang on, Bitcoin is too volatile. Why would anyone price in Bitcoin, right? But I suppose the rejoinder, what would your thought be on that? Would it be that as Bitcoin grows, it will be less volatile?
Yes. Well, actually, yeah, I'm glad you raised that question, because that was indeed a problem that Larry White had. I mentioned Larry as a intellectual colleague of George Selgin. Larry's at George Mason University, a very good place. Larry said he's working on a book about Bitcoin, and his problem is because of the fixed supply, it's very volatile in price. Actually, Saifedean had a very clear-cut response to that, to elaborate on Larry's point, it's volatile in price compared to gold, and gold, according to Larry, gold has the advantage of expanding its supply because there are indeed, we have all the above ground gold, and then we have the mining of gold every year. So we have an increase in the supply. Actually, Saifedean didn't put it as clearly in his debate with George as he did when he spoke to my son and me, because we met prior to that to learn a few things from him. It's really simply that if you can imagine that the price of Bitcoin goes to, I'll pick a number easily, $1 million an ounce, $2 million an ounce, as it could. It obviously is now worth what? I mean, at 10th, it's worth far less than gold is. But if in terms of actual value, it goes to a much higher price than today, which it will, if it's going to become money, then it will gradually become less volatile. In other words, if somebody wants to buy $1 billion worth of Bitcoin today, he has a vast potential to royal the price. But if he wants to buy $1 billion worth of Bitcoin when Bitcoin is worth several $1 trillion because of a very high price that it would be appropriately given because it's going to become money, then clearly that volatility question goes away. And then, of course, Saifedean made another very good point, which is that Larry is making far too much out of the expansion of the supply of gold. The expansion supply of gold adds like less than 1% a year to the supply because there's such a massive supply already there. The truth is, the reason why gold is less volatile is, again, because it's got the high price and the huge quantity, so that the capital value of all the gold in the world is such that if you're going to buy $1 billion worth of gold, then all of that value can absorb that $1 billion. Bitcoin will get there once it rises in price. So I think that was a fairly simple answer to what seemed to be a knotty problem.
Excellent answer. Yeah, that's a really great insights there. Gene, I normally try to keep the episodes around an hour, but are you okay to keep talking, or are you?
Sure, I could talk to another few hours. I'm sure your readers, your listeners will go to sleep before I do. What else you got?
Well, actually, I was curious as well if you've got any thoughts around what might be a good comparative for Bitcoin. And here I'm asking about things like, so, base money, M2, M3, etc.
Oh, wow.
So there are different, I guess, ways to conceive of the money supply. And I don't know, Austrians also have, I think, as Rothbard came up with, I think it's called the true money supply. So, I mean, there are different, comparisons. Do you have any ideas on, typically people compare Bitcoin and gold, right? Gold has, if you will, a market cap of something like 8 trillion, around that area, whereas Bitcoin today is, a little bit under 200 billion. What do you believe would be like a more appropriate way to think about the money supply?
Wow. Well, you used good numbers, so I want to pick up on the point and just go back to my earlier point, which is that, again, Bitcoin has that low capital value because it's low in price. But it could rise to $1 million per Bitcoin and be comparable in terms of its capital worth as gold is, and therefore it would not be so volatile. But the point, of course, I'm familiar with Rothbard's rather agonized attempts to count up the money supply in terms of what is most liquid, and I think that's an interesting exercise. But the best answer I can give to this subject is that we've been talking about gold as money, we've been talking about Bitcoin as money, and then we've been talking about the U.S. dollar, the euro, the yen, the Canuck buck as money, and those are indeed what we use, because indeed the U.S. has a legal tender rule, and the legal tender rule is constraining, and the constraining rule is that you and I could make a contract in bananas if we want. I will pay you bananas for services rendered, but because bananas are not legal tender, I will have a much more difficult time getting that contract enforced, and you will have a more difficult time if there is a problem. But if it's legal tender of the U.S., then you'd have a much easier time in the U.S. courts getting that problem enforced. So, but I mention that only because, by and large, when it comes to that moment in which a transaction is made, the transaction is made in one of those currencies, or the transaction is made in Bitcoin. And really, the only interesting part of this, this whole exercise, which I've been well aware of course, I'm aware of, M1 by M1 in the classic tradition of the monetary economists. M1 is just cash and checking accounts, and those are the immediate uses we put to transactions and purchases. But there's no question that you can use some other liquid things. For example, if you want to put up margin to buy to speculate in commodities, then you can put up T-bills, treasury bills, which are very liquid, which you can put up 30, 90-day treasury bills, which are earning interest. So there is always potential to use what is called near money, which is that it's very liquid. You can convert it fairly quickly to money, but it's earning something. So there will be a need, a clear motivation to keep your money in something that is earning some interest for you, that's working for you. This gets into lots of different complications having to do with fractional reserve banking. But the only simple point I want to make is that, yes, we will always live in that world. We will always live in that world in which it will become profitable for financial institutions to offer to people ways of being in near money, so they can earn a little bit of interest, and so that where they're paying interest, and where why would I have the motivation to do that? If you and I have a financial institution, we want people to put their money with us, and we want to offer them as many inducements to do so as possible. This might begin to start segueing into discussion of fractional reserve banking, but I only wanted to make the more limited point that even in a world of Bitcoin, and as in today's world, we do have near monies. We will certainly hopefully not have so many treasury bills out there, because we have a government that's rapacious in borrowing money, and it can flood the economy with these short-term treasury bills that are liquid and that mature quickly and that can be used as quasi money. But we will always have different sort of academic discussions about how much medium of exchange do we really have, even in a world of Bitcoin. If we have, however, 21 million Bitcoin, we will have put that in the center of the universe, and then just outside, we could have certain instruments where you've bought it with Bitcoin, but you're only holding that instrument that could be converted very quickly to money. So that will always be a presence, but I don't think in itself it's very decisive. If we have 21 million units of Bitcoin, we will always have some near monies on the periphery around it, but I don't think that makes a huge difference in terms of us trying to figure out what is money. What Rothbard was trying to do was figure out what is money in this current economy, and was it savings accounts? What could be converted? Was it all of that stuff? Interesting exercise, but not really decisive for a world in which we have a free market in money.
Fantastic. And I think with that, we could also think of it like, so right now, part of being a Bitcoiner is that you hold your own keys and that you are verifying using your own full node. But I think the point to sort of put that into the context of this kind of the banking system, if you will, in a Bitcoin world, that there may be big Bitcoin providers, right? So, and in some sense, they become like a Bitcoin bank, right? So the Coinbase, Zappo, and other big Bitcoin companies.
Mm-hmm.
But I think the crucial point is that there would be no legal tender laws saying that, you private individuals out there, you must regard a Coinbase Bitcoin IOU the same as a Zappo Bitcoin IOU, the same as a Bitcoin stored on your own full node with your own keys, which are different, right? And I think perhaps the intuition there would be there might be a difference in the prices of these, or at least there would be some difference in the consideration of these, right? I would say, holding Bitcoin on my own keys is obviously that's real Bitcoin, whereas Bitcoin held for you by Coinbase, for example, is not the same.
Wow. I'm sorry. And you're saying, when you say it's not the same, you're not saying that if you use the one, you'd have to pay more in Bitcoin for the same item. Is that what you're suggesting? You don't mean that, right? Do you?
Right. No, I mean more sort of in the. I'm just saying in the sense that people would naturally be more. They would scrutinize harder of some of these institutions to be like, hold on, are they doing fractional reserve here? Do they really have the Bitcoins that they claim to have? And I think that natural skepticism might drive people towards the self-custody, holding your own keys version of Bitcoin. Does that make sense in your view, or?
Mm-hmm. Well, certainly, if I understand your drift, then almost all, certainly Selgin and others agree that clearly the free that we are naturally conservative about our money. I mean, if that's what you're suggesting, if I understand you correctly, most people are, and that there will be on the free market, there will be dominant brands that will have to establish a reputation for safety and soundness. That it's the last thing that we want to have to worry about is the availability of our money to transact with. We've got so many other considerations in mind. Again, the main point I was trying to make earlier is that the holding of money balances is actually a relatively trivial thing. We don't want to hold money. We want to hold only so many money balances as we think we need to make purchases with, and that means we're going to keep them to a minimum. And it does get back, but indeed we want that to be perhaps the least interesting thing about what we do with our money. Even those of us who love to talk about investment and speculation, the least interesting thing, because that's simply what we have available to make purchases with. And so indeed, just imagine a world in which all of those currency traders will have to look for something else to do with their lives. Wouldn't that be wonderful? Of course, obviously, in a way, we're really talking about closing down about 80% of those people who earn their money in finance, who trade treasury bills, so many things will become much simpler in the world, very nicely boring, and we can get on with our lives and do other things rather than worry about such matters. But if your suggestion is indeed that the free market will bring safety and soundness, that's for sure. Although I guess I like to focus on on all of the eccentricities of people, and then that's where Saifedean was saying, well, there might indeed be a fair amount of of Bitcoin cash that people want to hold, that people want to hold, maybe want to hold some dollar bills. The idea that everybody's got to be trading Bitcoin on computer, I mean, checkbooks, there would be pretty much obviously a response to the quirks of people when it comes to the way they want to transact in money. But your point you just made, to the extent that I understand it, is well taken. Yeah.
Yeah.
Sure.
Well, I guess even to that, there is a product out there called the Open Dime, right? And so people can basically send Bitcoins to an address, and it kind of is like a physical Bitcoin, if you will. I mean, it's obviously, there's different trade-offs around that, but you can literally trade that around. And so to your point around having cash and coins, Open Dimes and similar devices may be able to fill some of that role. Look, I think I've kept you for a little bit longer than
Okay.
But look,
the only thing we didn't talk about, and the way I'm glad we ducked it because it's a little bit complicated, is the debate that George Selgin had with Bob Murphy about fractional reserve banking, and there, I think you have pretty strong views, but my views are a little bit wobbly, probably compared with yours. But maybe that'll be a discussion for another day, just to tantalize our listeners out there.
That's right. That's right. We'll keep that for another episode. But Gene, do you want to just make sure you tell my listeners about the Soho Forum, tell them where they can find you and what's coming up?
And by the time you're listening to this, we probably will have had the debate on the war on drugs. But you can go to thesoulforum.org or to Reason TV, Reason Video, Reason Podcast to listen to all of the debates we've had. I'm actually working on a collection of transcripts of some of the more interesting debates, which will include some commentary from me. We've had over 35 debates so far on different topics, mainly of interest, of course, to libertarians. My big confrontation is going to happen at NYU, a much bigger hall than we usually use. We usually hold these debates at the Subculture Theater on Bleecker Street, which seats a little over 200. This debate on socialism is going to be at Kimmel Hall at NYU, which seats nearly 500. I would like to attract a lot of socialists to the debate. That's going to be November 5th. The other big one that where we sold out so quickly that we're renting a much bigger hall. In this case uptown. It will be the debate between Scott Horton and William Crystal. William Crystal is known, certainly in the U.S., maybe in Australia, as being perhaps the most prominent neoconservative in our country on the subject of foreign policy. And so I was quite grateful to him for consenting to debate a rebel, a brilliant genius rebel on foreign policy like Scott Horton. And as soon as I announced it, we sold 250 tickets within a couple of days. We're now up to 500 tickets, and it won't be until next May. So that will be a big debate that we're going to have. And of course, you in Australia, if you can't make it to New York, you can always listen to our debates. And as I say, we've got 35 that we've done, and all of them, I think, of interest. Some of more interest than others. The ones that you and I just discussed, the two that have occurred on Bitcoin are available on podcast and video.
Fantastic. I've really enjoyed speaking with you, Gene. Thank you so much for joining me today.
We'll do it again next time, Fractional Reserve Banking. Talk to you soon. Bye-bye.
I hope you enjoyed the discussion with Gene. Just a quick announcement. Are you running your own Bitcoin full node? Have you figured out how to connect a hardware wallet to your full node? As some of you know, my co-founder Ketan and I recently set up an Australian Bitcoin education company, Ministry of Nodes. We ran some in-person workshops to teach Bitcoin and got some awesome feedback. We wanted a way to scale this up over the web, so now we're announcing the Ministry of Nodes Self-Sovereignty webinar. The first one is coming up on the 2nd of November, Saturday afternoon or night for the people in the US, and that will be Sunday morning, the 3rd of November for Australian attendees. It's Bitcoin only for payment. It's priced at 615,000 sats, or approximately $50 at the time of recording. And yes, shout out American HODL for inspiring our pricing. So it's a 7-hour webinar, including some time for breaks, and it's targeted for beginners or perhaps some intermediates who want to learn how to set up their own node and get practical advice and guidance and tips on how to self-custody Bitcoin. You might be coming at Bitcoin from a more economic or finance perspective and be less technical, or you might be on a Trezor or a Ledger and not be clear on how to run your own node and how to validate your own Bitcoin transactions. Learning about Bitcoin is like drinking from a fire hose, and there are lots of traps along the way. Let us curate and teach you the material so you can confidently put it into practice. Go to ministryofnodes.com.au and click workshops to sign up. Lastly, subscribe to the podcast, find the show notes and transcript on my website, stephanlivera.com. Thanks for listening, and I'll see you in the Citadels.